This is Paul, and this is Max. Max makes 100k a month with trading, and Paul makes zero amount of money with trading, but he's already been trading for 2 years. And why is that? Paul thinks it's because of his model, so he asks Max if he can share his model to him. And because Max is so nice and cool guy, he gives him his model, a exact step-by-step system, what you need to look for, what you need to apply, how to manage your trade in order to make this amount of money. But Paul applies the model, he backtests it, he learns it, and then he thinks, yeah, I'm ready. He got his checklist in his mind, and then boom, market opens. He sees, boom, checked off. He sees the second thing, he sees the third thing, he enters, and he sees, okay, I'm going break even after we do this, and that, because that's what Max told me. So I'm waiting for this. I think price doesn't look good. I think I should go out. I don't really like how price is moving, but we didn't reach our break even point yet. So I will wait for that. And then price reverses, stops him out, and Paul is sad and thinks, man, I should have got out break even because I knew this price is going to do this. But we didn't hit my break-even point. Max and Paul have both the same model. Max makes a lot of money and Paul doesn't. How does this work? Both trade the same, but why does one make money and the other loses money the whole time? And this is because of one thing, and one thing only, called discretion. Discretion is basically your market experience and your intuition in trading. And that's it. And discretion is what makes you actually profitable. If you stay long enough on the charts, trade long enough of one model, don't strategy hop, you trade the same model for a long amount of time, backtest it, journal, review every single mistake that you do, review your journal, see what you can improve, see what every single thing, try to analyze every single thing, and you can build your discretion. Why is discretion so important, you may ask? Because the market actually does what it wants to do, right? Even if you have your system, A+ model, perfect setup, it can easily just reverse on you and stop you out and do the complete opposite thing of what you actually thought market's gonna do. So you need discretion to recognize certain market behavior and kind of repetitions to manage your trade correctly, to know what A+ setups to take and what A+ setups not to take. Because if you don't have discretion, like Paul, he takes every single A+ setup that he sees. But let's say Max, he sees also the same A+ setup, but he thinks, it took us 2 candles to inverse the fair value gap. I'm gonna stay out because I saw a lot of times that if we take 2 candles to inverse the fair value gap, we gonna not deliver. And Paul thinks, yo, we inverse the gap. This is the A+ model. We did this, we inverse the gap. Let me enter. And this is because Paul didn't spend a lot of time with the same model, and he just simply does not have the experience that Max has with the model. He didn't see this same setup play out 100 times over and over and over and again, and he didn't see that if it takes us 2 candles, we are most likely not gonna follow through. But Max seen it a lot of times, so he's just gonna stay out even though it's still an A+ setup. And also the same example that I mentioned earlier. And this is what happened to me. And this is why I'm starting to move from mechanical trading, because mechanical trading does not work over a long period of time. If you traded TGR's model 1.5 years ago mechanically, you have your step-by-step system, your pattern. It's a pattern trade basically. If you trade without discretion, you are pattern trading. Liquidity sweep, break a structure, tap into fair value gap, equilibrium, whatever, I don't know, and then target higher. This would work 1.5 years ago, but now it doesn't work. If you pattern trade every single liquidity sweep, break a structure, fair value gap, you're going to lose money. You are going to lose money because you don't have the discretion, like which trades to take, which liquidity sweep is valid, which fair value gap tap is valid. There are 1,000 setups happening every single day, every single model. But you need to actually realize, yo, is this good? Is this nice? Does this look good? Is this what I want to see? Because let's say you trade continuations like I do. I'm only looking for nice drawn liquidity. We pump to, like, displays to it, retrace, flip. That's so simple, guys. Simple continuation model. Market moves like this, right? Boom, 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 uptrend. If you get a draw liquidity right here, what am I looking for? Displacement, retrace, flip. I'm entering somewhere around here, target higher. Happens so many times. For example, right now, let me show you. Some trades that I could have done better only if I used my discretion. Some trades I missed, some losses that I could avoid, all of this stuff. And only if I used my discretion, I could have done it better. But I stick to mechanical trading and my mechanical rules, and that's why I failed, but I learned from it, so it is fine. Boom. We are starting dumping. We got a draw liquidity somewhere right here, I think. It was a nice, perfect daily low. It was this one. Let me mark it out for you. This daily low. And what do? I'm waiting for us to displace lower. What did I tell you? Boom, we are displacing lower. Then retrace. Boom, retrace. And then we need to have a nice flip displacement that is stronger than the retrace. What do we get? W. Perfect setup, A+ setup of the 5 minute. I'm taking it and it fails. But why did I lose the trade even though it's an A+ setup? I saw everything that I needed. Boom, dump, retrace, flip, A+ draw. There's one thing that I was thinking of doing, and this is, some would call it crazy, an emotional break even, but I wanted to go break even after this candle closed right here. Why? If we look right here, whole session moved like shit. We failed to deliver a lot of times. Some people took this trade and we failed to deliver because we got out of nowhere we got this fat retrace. And then some people took this right here and then out of nowhere they got stopped out of break even because of this right here. We tend to fail to deliver normally. Then bro, what is this? Low volume candles. And out of nowhere we get 4 candles. In 4 candles we pump 140 points. And then the next 3 candles displace 90 points. So we have a lot of volume out of nowhere when the trade forms right before the draw liquidity. So what I assumed entering into the trade, I thought I am gonna take a trade and it will flush immediately to my draw liquidity. And I entered and I actually just want to see one more candle and then take my take profit. But after seeing this tiny candle, I thought to myself, yo, using my discretion, I saw this happening a lot of time. If we go aggressively up, aggressively down, we need to go aggressively down even more. If we stop, then we are most likely gonna chop. And I was thinking, yo, okay, let me go break even right here. But I think it would be emotional because I didn't trust my discretion. You also need to trust yourself, your knowledge, because all of you guys, including me, we are better traders than we actually think. Mechanically, I would go at every single internal low or internal high, I would go break even. So I was waiting for us to hit this low and then I would go break even. And I was thinking, okay, bro, we got a shit candle and actually if we even retrace into this big gap right here, I might be cooked and I should have traded my stop loss. I should have just listened to my experience, to my discretion and got out. I learned it the hard way, so it is fine. I'm gonna, bro, show you another example. If you follow exactly every single mechanical step, you will miss a lot of trades. For example, in this case, where was this? This was right here. Look how we were dumping on the higher time frame. We just took this low. We even put in SMT, so bro, and we got so many unfilled higher time frame gaps. We got this unfilled 1 hour, this unfilled 1 hour, and I think this unfilled 4-hour gap. So I'm actually looking for longs, right? What do we do off open? We come down, we get one candle that is 45 points. Next candle bullish, 50 points. Another candle, 60 points. We pumped in two candles, we pumped 100 points. What am I looking for? I just told you, A+ drawn liquidity, pump to it, retrace, flip. Do you see something? We pump to it, no retrace and no flip. And that's why I didn't take the setup. I actually took it on demo because I take discretionary trades on demo to practice. And I told my friend in the Discord, as this candle was printing out, we are 100% going to hit the target. Not the first one, it was a tiny gap. I don't care about that. 100% we are going to hit the target. I'm taking it on demo. What did I do? I took it on demo. Boom, right here. Because my discretion told me it is so logical, it is so obvious that we are going to go to this 1 hour gaps, and after pumping 105 points in 2 candles, we simply won't come lower because we are already overextended, swept lows. Everything made sense for this trade. I wanted to take this, but I told myself, let me follow my rules. Let me wait for actually another retrace flip. And of course you don't get it, and I miss out on this W setup on my XFAs, and I take it on demo. And then I started realizing actually what it means to trade with discretion. I see so many setups playing out. I see something obvious, and I tell myself, bro, I want to take it so badly. And then I don't take it because it's simply not the mechanical model that I used to take, mechanical system. And don't understand me wrong, right? You still need to follow your rules and your system, because if you don't have your model as the framework, as the base foundation, right, you are going to fail. You are going to fall into a deep rabbit hole, and you are going to start taking bullshit trades that don't make any sense. So please, please, please don't take it as an advice to trade every single, like, obvious, I would say, trade that you see. Please also apply your base model and strategy as the foundation. And with my discretion, I could have easily avoided a loss, but I didn't, because I was actually waiting to follow my mechanical rules. And yeah, bro, a lot of things like this happen because you actually don't trust yourself. It's a lack of confidence, lack of trust into your discretion. So what I will do now, and what I'm suggesting you to do, hop on demo. And if you're just, of course, struggling with the same shit, just start taking more discretionary trades. And as soon as you get confidence, bro, just execute. Just execute, bro. You're a better trader than you actually think. And do what your gut says you to do. If you see an A+ setup, but something is off, if you're in doubt, stay out. If something's off, just don't take it, but because there is a reason for that. Why discretion tells you, why your own discretion tells you, let's stay out. I'd rather stay out of from this setup. And there's also a reason for, like, not A+ setups, bad setups, B setups, discretionary setups. You see them and you think, bro, this is the freest setup I've ever seen. Like, most obvious setup, but I can't take this because it's not my model. You can avoid these things with discretion, guys. So actually apply this tip and your trading progression will skyrocket. I hope I could help y'all, and we'll see us in the next video. Bye bye.